Hello everybody, welcome to this Friday's Protection Update, the 22nd of October. Now Legal & General are introducing some changes which will kick in next month, and this will affect how they pay commission, and they're calling it CO1P, or in other words, collection of first premium. Now currently the way that Legal & General have been paying commission is in advance of the collection of the customer's first premium payment. Now in some instances that payment can be made within a couple of days of the risk date being confirmed. Now Legal & General say that they're making this change to come in line with many other insurers, which is to pay the commission once they've received the first premium. That's how it's normally done across the industry. Now the new system will effectively instruct the bank to establish the direct debit and then pay the commission once the direct debit has been activated and the first payment is made. Now Legal & General have been proactively contacting advisors about these changes over the past few weeks, so you should already be aware of these changes if you are a supporter of Legal & General. Now, I wouldn't normally advertise every communication about provider systems being taken down because these are usually in the middle of the night or at times when most people wouldn't use them anyway, but just to let you know that this Sunday, the 24th of October, if you are planning to do any work on Solution Builder, well, you might have an issue because between 9 o'clock and 1 o'clock, iPipeline will be carrying out their disaster recovery test on all iPipeline products and services, and that does include Solution Builder. What that means is you simply won't be able to do any work on Solution Builder this Sunday morning, and you won't be able to because you won't be able to log in. But from 1 o'clock, the service should, we're told, be back up and running and all return back to normal. Now this week we actually ran our final Better Sick Pay Schemes workshop of the year, which was all about the need for better sick pay solutions for so many people. And of course what we're talking about is income protection. Now there was a bit in the workshop where we looked at risk probability of things happening, and the way that I positioned it was by comparing the chance of something happening to somebody in the public eye versus the chance of a claim happening on an income protection policy. And I think this is because there's a point at which somebody is going to sit up and take notice about the chance of something happening when the numbers become significant and when it means something to them. Well, one of my examples this week was the chance of Steve Bruce, who's manager of Newcastle United Football Club, leaving his post before the end of the season. I looked at the statistical probability and the bookies odds. They were quite high, actually around 95%, or in betting terms, it was a 1 to 20 chance. Well, it was quite strange really because we didn't even get to the halfway point of the protection workshop and Steve Bruce had left Newcastle United. I guess with what was going on within that football club, it was an inevitability. But when you look at some of the income protection claim examples that we talked about this week, they were quite interesting because we had Fiona, who was 31, a non-smoker, planning to retire at age 70. She carried a 48% chance of going off work sick for 2 months or more in her working lifetime. We looked at another example, which was Sally. Sally's a smoker, retiring at age 67, and she had a 47% chance of going off work sick for 2 months or more during her working lifetime. And finally, Tracy, a female smoker aged 55, we looked at the odds of her going off work sick for 2 months or more in the next 5 years, or in other words, up to age 60. What were the odds? Well, it was around 11%, which you might not think is particularly high, but it is when you start looking at the most likely protection sale, which is life cover. So the call to action really is to ask whether you ever use risk probability in your protection conversations. My personal favourite is the LV Risk Reality Calculator, and that's because it was the first one in the UK protection market and it's really simple to use. If you've not seen it, just go to riskreality.co.uk/TRM. TRM stands for the right mortgage, and there you'll be able to create your own risk report and you might be surprised by what you see. Now, this week's Protection Insight podcast is with a live company which is probably not very familiar to many of you. It's National Friendly, and I caught up with John West a few weeks ago to talk about their quite innovative accident-only income protection cover. It certainly is a bit different, but you're going to be able to use it as an income protection solution for those clients who just find it difficult to get cover elsewhere. They might have been priced out of the market, or they could have other issues, which simply means conventional income protection just isn't possible. So do take a look at the podcast and see what you think. I think it's really good that these types of innovations are happening with protection products because it just gives you more options as the advisor. And of course, it also gives your clients more opportunities to get cover. So, as I conclude, if you're picking up this protection update on Friday afternoon, I will actually be attending the Protection Guru Awards down in London, and we'll know very shortly how we got on in the 2 categories that we were nominated in. That was Best Network for Protection Advice and also Best Compliance Function for the DA Club. I'll obviously report back next week, but I think to be recognised by something like Protection Guru, and of course shortlisted to just 3 final candidates, it really is an achievement in itself. So with that, I'm going to sign off. Have a great weekend, and I'll speak to you soon.